Chapter 4. Sell unrestricted investments. It's almost always a better choice to lower your debt levels if the rate of interest you're paying exceeds 10 to 12% and is not tax deductible. Sell it or use it. If you have any sort of investments, you might want to sell them and repay your charge card balances. You really want to be careful which ones you sell, however, as there can be some pretty awful tax consequences if you make a risky choice. Think about a 401k loan to repay charge debt. You will be able to likewise consider a 401k loan, as the interest you pay on it will go into your account. You are effectively paying interest to yourself. The bottom line is that you are able to avoid the income taxes and 10% early withdrawal penalization that are piled on top as long as you repay the loan inside the time frame allowed for by the Internal Revenue Service. In most cases, you would not want to merely sell 401k assets, cash out, and pay down your charge card debt. You are able to withdraw Roth individual retirement account contributions. IRS rules allow you to withdraw Roth individual retirement account contributions you've made into your account, but not the gain brought in on the money. In other words, if you've deposited $20,000 into a Roth individual retirement account over the past 10 years and have made $10,000 in earnings, you are able to withdraw equal to the $20,000 with no adverse tax penalties or consequences. Naturally, you lose decades of developing your money outside of the reach of Uncle Sam, but that's far better than drowning in elevated interest charge credit card debt. Brokerage firm and additional investment accounts. Investments you hold in regular brokerage firm accounts, such as stocks and bonds, will be subject to steady capital gains tax, but the emotional release that will come as you observe a big chunk of your charge card debt fall off should be far more pain-free than the cut taken by the IRS. Chapter 5. Snowball Technique. The snowball strategy can help you attack your charge card debt and repay your high interest balances for faster than you could by just utilizing a random payment arrangement. Get a roll going. The goal of taking charge of your financial life is to set up your cash flow every month. The more excess hard cash you have, the more you have to cut debts or spending on bettering your lifestyle. Each debt has a lower limit monthly payment. By paying off the bottom balance charge card account first, you bump off an entire fixed payment immediately, making your existing money reach further. You then take the income you were paying on the lowest charge card debt balance and send it into the following most modest. You duplicate this process until you are left with your single heaviest debt. This practice is called snowballing in the financial planning industry, as the sum of money you send into each payment bit by bit snowballs as each debt is cut back till you are sending in big amounts of cash to approach your biggest and last debt. Somebody who had $10,000 balance on a Bank of America charge card, a $30,000 department store charge card, and a $1,000 gas station charge card would send in all their additional money to the $1,000 filling station card. Once this debt was bumped off, they would take all of the income that had been going to it and blast at the $3,000 department store card. This cycle duplicates till all of the debts are repaid. It truly is an effective way to cut down and pay off charge card debt, and it's easy to comprehend. Charge cards. We love them and we hate them, don't we? Charge cards may make your life easier or truly complicate it. You can find out how to make the best utilization of your charge cards and how to avoid charge card traps. There are some free calculators on the internet that will show how your interest rate affects your account and what type of cards work best for you. Chapter 6. Snowflake Technique. The snowflake strategy is designed to help you pay off charge card debt by sending off so-called micropayments. These payments may literally be a couple of dollars and over time add up to big balance decreases, saving you thousands in interest expense. Little bits. You just discovered about the snowball strategy for reducing your charge card debt, so now it's time to talk about the so-called snowflake strategy. The premise is easy. Every time you get more than a couple of dollars in your hand, send it to your charge card company to reduce your owed balance. To make it clear-cut, we're virtually talking about $7.15 payments, or $14.50 payments, or $3.20 payments. If you just park it in the bank, you're going to spend it. That's human nature. If all you are able to get hold of is an extra $2.74 per day, that's $1,000 each year taken off your charge card debt balances. Individuals often ignore the power of little amounts. As with everything in life, there's compounding effect that goes to work. It's the same principle behind the Indian story of the ant that was able to move a total mountain, one grain of sand, a bit of dirt at a time. Your little efforts might not look like they're even denting your charge card debt. In the total, over several years, the results will be nothing short of outstanding. It's the nature of the universe. Multiple payments can more closely align payroll checks and payments. Do you get paid every week? Make a small payment weekly rather than one big one every month. You'll even out your monthly cash flow. Pay down charge card debt more quickly in the same way a biweekly mortgage works. With biweekly mortgages, homeowners pay 1/2 their monthly mortgage amount, but they pay it every 2 weeks. With 52 weeks in a year, that means 26 half payments or 13 monthly payments rather than 12. On a mortgage, biweekly payments may shave about 7 years off a 30-year mortgage. The same precept would work if you divided your monthly payments in two and then paid that amount every 2 weeks. Capitalize on windfalls. Once you get in the habit of paying multiple times, charge card payments will come to mind if any windfalls come to your wallet. Build up good payment habits and step up satisfaction. Seeing your balance fall day by day keeps you centered on the task of climbing out of debt and builds a sense of achievement. Chapter 7. Cut them up. One strategy for reducing charge card debt suggested by financial planners is to freeze your cards in a block of ice, helping you avoid the enticement of inessential purchases. Out of reach. A long time ago, a financial planner told customers to freeze their charge cards in blocks of ice. When they were enticed to spend, they would be forced to dissolve the ice, giving them time to take a second thought about an impulse purchase. An even more beneficial answer is to cut up your cards totally so that you cannot charge anything else to them. What good does it do to stop up holes in your boat if you're perpetually drilling fresh ones on the side? Some people may be thinking, but I cannot pay my bills without a charge card. That means I don't get to eat. This might sound cruel, but I have news for you. You are not paying your bills, really. The charge card is simply allowing you to put off the crack of doom and helping to guarantee that when it does come, it will be much worse than you ever thought. If you are correct, you will almost sure as shooting qualify for free food assistance in your state. If you do not, move to a state where you do. I'm being serious. In a few states, you are able to get up to $300 or $400 per month in tax-exempt food money on a debit card. If you do not qualify, then you have a spending issue and you are still making justifications. If you still state you cannot make do, you really are full of it. Once again, my apologies, but it's straight up. When I was in my younger years, I moved to another state so I could pay $180 for my half of the monthly rent for an apartment I split with my best friend. At the time, I was bringing in the 6-figure investment portfolio income and nearly no debt. My goal was to build up my wealth, and at that point in my life. Was it pleasurable? Not totally. However, I wanted something very few individuals accomplish: complete and total financial independence. I had a family member who slept on an air mattress for a year and a half so that he could save more than $40,000 by the time he left the Marine Corps at age 25. If I can do it and he can do it, then there is utterly no reason you should not be able to do it. Get determined and reach for what you want and keep the credit cards out of reach.